Good afternoon, everyone. When it comes to the markets, I don't think there is anyone better to explain to us the nuances of what's happening. Something that much of us cannot follow than Mr. Nilesh Shah, who is the MD of Kotak. For several years, he has been the eyes and ears of the markets, and it's a pleasure to have you, sir, here today. In fact, when we were having the sessions earlier during the day, we were saying how things have just changed from what it was to till yesterday to what it is today. I mean, we are living in a world of extreme dynamism. So, at this point, the markets seem to have liked the fact that the war has sort of ended. We have seen the news of NSE getting listed, etc., etc. From your perch, how do you see what's happening around? And how is it going to influence the decision of investors going forward?
First, thank you, India Today, for having me over here. Second, there was probably underinvestment in market and shorting in the market that resulted into pullback thanks to the announcement on war. But I think there will be worries ahead in terms of monsoon, in terms of deep technology. So as Nimesh mentioned, the returns will be moderate, volatility will be high, and one will have to manage volatility.
Yes, we will have to manage volatility. And one of the gentlemen in the earlier session said that, volatility is a given. I mean, that is what the market is all about. But for the Indian investors, it has been extremely a kind of a volatile phase. And all of a sudden, things began to be talked about, the fundamentals of the country, and also the fact that on the FDI front, we are losing a lot of money to expatriation, etc. The balance of payment situation came into discussion after several years, I mean, after 91, for instance. What is the actual picture on the macro front?
So one, always go by data, don't go by commentary. The fourth quarter FY26 was surplus. April 26 was surplus. And if we read the commentary in March and April, it was almost as if the world was going to come to an end. So never go by commentary, always go by the data. If we look at the past data, things are all looking too good. GDP growth 7.8%. Corporate results, mid cap up 36% year on year profit growth. Small cap 19%, large cap 12%. Private capex up 10%. Inflation rising but still below 5% handle. So overall past looks very good. It is the future where there is uncertainty. And as I mentioned, we still have to figure out what happens to monsoon. While agriculture is a small percentage of our GDP, water is a substantial portion of our economy. And we also need to figure out what happens on deep tech. Undoubtedly, India has very limited presence in AI trade. And if that trade doesn't reverse, it could have consequences for us. So my limited point, there will be volatility. Yesterday it was oil, today it will be monsoon, tomorrow it will be something else. We need to focus on our asset allocation. We need to focus on our portfolio and keep return expectation moderate.
There has been this concern that the markets are very overvalued. In fact, this is something that has cropped up in some of our discussions earlier also. What is your take on this at this point?
So with the benefit of hindsight, market was overvalued in September 24. Earnings didn't come and valuation was in the 22, 23, 24 band as earnings kept on dropping. Today, earnings growth is assumed quite moderately, about 12, 15%. Based on the fourth quarter run rate, it looks like it's achievable, provided monsoon comes fine. And if that earnings growth come through, then 18 times market is fairly valued. It is not as expensive as it was in September 24 with the benefit of hindsight. And it is not as cheap as it was in COVID 20 uh, at 10 times forward. It is fairly valued, neither expensive nor cheap.
So, what are the things that one should be cautious of going forward? The oil prices, of course, the war has sort of ended. At the same time, there are experts who say that the kind of issues we have seen, the prices will remain high for quite some time. The disruptions will not sort of get eased overnight. Inflation has already started to creep up in the economy. I think the RBI has also warned to that extent. So, what are some of the warning signals that are coming that you would be taking cognizance of?
So, Arun, when you go to play cricket, you have already observed pitch, you have already understood the bowler, you have already kind of taken idea of what the fielding is. You don't really care for all those things. When you are there to bet, you'll focus on the ball and play the ball on its merit. If it is half volley, swing the bat, go for a six. If it is Yorker, wicket bachalo. So please don't get too much focused on so many things which are happening around us. Inflation, interest rate, oil prices, policies, they will all change. But the business doesn't change that frequently. It's the price which is changing. Value doesn't change that frequently. Focus on value. Price is what you pay, value is what you get. Are all those noise impacting the value or not? Actually, when you do that calculation, you realize 80-90% of the noise has zero impact on the value. They move needle by a very, very small margin. So focus on playing the ball on its merit.
Have you been concerned as a person who has been an evangelist, I would say, for mutual funds in the industry, by the kind of disappointment a lot of retail investors have had? And we have seen so many of them join the investor force during the COVID period. Um, so, how do you tackle that? What would be your kind of advice to them?
So one, Arun, I don't agree that investors are disappointed. If they were disappointed, it should result into flows getting reduced. Flows are nearly all-time high. It should result into complaints that 2-year SIP returns are negative. We are not hearing that. In fact, when we go out, people are saying, Nilesh bhai, 3 saal ka return abhi bhi double digit hai. So I think there are people who are bothered about investors rather than investors themselves. And investors have matured. By and large, over last 3 years, they have put money SIP plus lump sum whenever markets are cheap. And they have taken out money whenever markets are in momentum, where it is SIP minus redemption. And by and large, that pattern has continued. So overall, I don't think so investors have bothered about 2 years return being negative or low. And they have continued taking advantage of those cheaper valuation to build their portfolio. Now, majority of investors is all courtesy the financial awareness campaign which media has carried out, SEBI, MFI has carried out, distributors have carried out. So hopefully, I think investors have matured a lot, and that will give them advantage in managing volatility.
The government and the RBI has recently taken up a slew of measures to attract FPIs, which because that has been a big concern, the outflow of FPIs. So, how much of an impact do you think that is going to have? We have seen some of it happening, but on the long term, is that sufficient?
So Arun, what RBI has done is very positive. But please remember, we are borrowing. We are not getting money for free. We'll have to pay higher interest rates and we'll have to repay that. Now, think about other options. There's this small country called El Salvador. वो मैप में कहां पे होगा बहुत कम लोग ढूंढ पाएंगे. There's a company called Tether from El Salvador. They launched a stable coin backed by gold. And their AUM is $20 billion. Now, if people keep gold in El Salvador, no one will trust them. They recognize that and they put gold in Switzerland. Gold Switzerland में El Salvador जैसा brand, and yet they raised $20 billion. Who's the largest holder of gold in the world? Indians. Why don't we allow Indians to launch Tether kind of stable coin backed by gold? Will people trust us? Undoubtedly. Gold भी यहाँ रहेगा और डॉलर पैसा भी आएगा. And you don't have to pay any interest on it. थोड़ा फाइनेंशियल इनोवेशन सोचना चाहिए. पुराना प्ले बहुत खेल लिया. Time has come to play with new rules. Can we launch tokenization? Can we launch stable coin backed by Indian gold? You will get money and still keep the gold.
That is very interesting. When it comes to the interest that a lot of women investors have, particularly, in the markets, that is a phenomenon that we have seen lately. And even several governments are of the view that if you give subsidies, you have to give it to women, because if you give it to men, it never reaches them. So how do you view this big step of more women coming into investing?
So undoubtedly, if we want an equal society, it should start with financial backing. In our society, we have male dominance. And there is this beautiful book by Kundanika Kapadia called Sat Pagla Akashma. It's available in Gujarati, Hindi, English, and many other languages. I'll strongly recommend you to read that book. And I keep on reading that book every third, fourth year whenever I get a chance, so that मैं जमीन पे रहूं. And one example there, कि हमारी संस्कृति में जब हम बहू को आशीर्वाद देते हैं तो क्या बोलते हैं? अखंड सौभाग्यवती भवो. वो आशीर्वाद भी बहू को नहीं देते, अपने बेटे को देते हैं. ये माइंडसेट बदलना पड़ेगा. And how will that mindset change? It can only change if women have financial power. Hence, I'll strongly recommend people, please ensure that you are financially independent. Today, in most women's case, their husband, their sons, their father, their male relatives manage their money. I'm saying all these things, but in my house, my mother's money is managed by me. My wife's money is managed by me. My daughter's money is managed by me. They are also not willing to take responsibility.
Or the risk.
No, it is responsibility. It is not risk.
They think you are the best person to manage the money, like a lot of people.
I'll still recommend all of them from this public domain. You take my advice, but keep control with you. Today I stay with my mother and hopefully I am taking good care of her. But if she was financially independent, she'll have more freedom. I think every woman should take financial destiny in her hand. Do take advice from your male relatives, but keep control with you. And government and industry should encourage that.
So that's a great message for the women in this beautiful hall, as well as those who are listening to us digitally. We are seeing a lot of flux happening in those way the industries are being shaped. There are a lot of buzz around new age industries, semiconductor business, renewable energy. In fact, some of the earlier panelists were mentioning the manufacturing sector, which could come into prominence. because of the thrust on self-reliance that the Prime Minister has talked about. He had been talking about earlier, but not many people got the meaning until we faced a situation in the Middle East. So, what, according to you, would be some of those interesting segments one should be looking at as an investor?
So I'll just share one incident which kind of shows how easy it is or how difficult it could be. There's this one company in which we have invested. They are making particular kind of machine, but the heart of the machine comes from Germany. And there are only two countries which make this heart, Japan and Germany. And Japan is a global leader in this machine with 50% market share. Now, when this company wants to sell, they have to take permission from Germany whether they can sell it to that counterparty or not. So logical is, can you make controller in India? Obviously, it requires money. The government of India and the state government has provided almost 65% by way of capital subsidy. So money problem is sorted out. Then you require technology. Now to make this controller, you require 7 kind of different technology: laser, alloys, precision engineering, molding. They are all available in India, but they are scattered in 7 places. Some public institute, some educational research institute, some public-private partnership. He needs to get technology from the 7 places so that he can make controller. The government is willing to give money. Government is willing to provide support. Every week there is a follow-up to check if there is any hurdle. But to get this knowledge from 7 different institutes is not as smooth as it should be. The other advantage which this company is now having is AI. Thanks to AI, knowledge which was restricted in MIT laboratory or a Bell lab is now available in public domain. All of you would have heard about that Australian who was neither a computer scientist nor a medical person. And when his dog got cancer and every doctor lifted his hand, he put the tumor report on AI, find out drug discovery, and cured the dog. So knowledge gap is now getting bridged quite significantly. Now, manufacturing exports will take off provided such entrepreneurs are supported on technology side. There are positives, there are negatives. My bet is that eventually we will pull it off. Thanks to AI, the knowledge gap has reduced significantly. So on engineering exports, on manufactured exports, India will see emergence of small, mid companies which will eventually become large. In the last 30 years, we had one Motherson Sumi. Over next 30 years, we'll have multiple of that.
Wonderful to hear that. And what are some of the other segments that you feel would be interesting other than manufacturing?
So in the medium term, we think banking and financial services should do well. The CD ratios were all-time high, so growth was constrained. With FCNRB, ECB and bank borrowing liberalization, this year's deposit growth should be taken care of. That means their growth will be better than expected and hopefully margins will be accretive with FCNRB deposits. The NPA levels are still under control. The second will be related to hospitals and healthcare. Consolidation is happening on hospital sector. People are spending more money on healthcare and hospitals should continue to do well. The third one is hotel and tourism. We think Middle Eastern tourism will shift towards India. Not foreigners visiting Middle East, but Indians going to Middle East. So domestic tourism should take off and hotels should have high occupancy. So hotels and hospitals should do well. Cement is one sector where there is consolidation and government's capex should continue. Put together, if monsoon is good, then cement also could be a good bet.
It was interesting to note that you talked about tourism and you stressed the fact of domestic tourism because the PM had warned us against international travel. He also warned about um, gold, usage of gold. How do you see that? Because gold is something that is almost like a parallel investment economy which thrives on gold.
So, I mean, in a very simple word, we are like कस्तूरी मृग. कस्तूरी नाभि में है और जंगल जंगल घूम रहे हैं. In last 8 years, our current account deficit was $251 billion. Gold import on a gross basis was $353 billion. Silver, diamond, pearl, they are all additional. We are told we are current account deficit country. We are actually current account surplus country if the gold import was not there. Now, we have imported gold. It's now 125% of our GDP. How do we monetize? One idea I gave, Tether, allow Indian startups to launch gold-backed stable coins and market it all over the world. The second could be gold monetization scheme. World over, recycling of gold provides supply to the gold. In India, recycling is far less. We have seen now Titan and other jewelers coming and saying that you can sell your old gold and buy jewelry. We need to push recycling of gold. A lot of gold is in tijori. That's in black economy. We need to figure out an innovative way to bring that gold out. And finally, gold loan financing. It's now almost 6 lakh crore industry. It's growing at a rapid pace. We need to figure out how to encourage that. Look at the irony. A home loan is a 20 to 30 year product and it is secured and given to retail investor at 7 to 9%. वही बंदा गोल्ड लेके जाता है शॉर्ट टेन्योर लोन लेने के लिए 3 महीने का, उसको देते हैं 24% पे. मतलब हाउसिंग लोन और गोल्ड लोन में फर्क क्या है? Gold loan is shorter, more liquid, more secured, and yet it doesn't happen. So we need to figure out way to monetize the gold which we are holding.
I think this question was about the NSE gold monetization. So why don't you ask it? Can you have a mic?
Yeah. So Sailesh bhai, that's a beautiful concept.
Just wanted to ask about whether electronic gold receipts launched by the National Stock Exchange will contribute to gold monetization.
Undoubtedly, Sailesh bhai, it is a beautiful concept. The gold lying with people, if it can be brought via EGR into market, and then jewelers and others can borrow, like the stock lending borrowing mechanism, gold lending borrowing mechanism. And there's no better brand than National Stock Exchange to do it. You have ability to collect gold probably all over the country. Your brand is synonymous with trust. People will be happy to give money or gold to NSC rather than XYZ jeweler. And the jeweler can borrow money with appropriate margin and security. So like stock borrowing and lending mechanism, this EGR is a fantastic step. And I wish we would have launched it 25 years back.
Wonderful. All of us would know that Mr. Shah is not just mastermind when it comes to the markets, but he's also a singer who can, in the sense, you can come up with some very interesting lines according to what's happening in the mood of the country or the markets. What is a song that is coming to you? Last year when you came to us, you did sing. But what is a song that's come to you at this point? Is it a jubilant one or a...
So Arun, this time I have upgraded myself. Now I'm into dialogues rather than songs. So 3 Hindi film dialogues you should remember. First one is Nana Patekar Yashwant. एक मच्छर आदमी को हिजड़ा बना देता है. ट्रम्प साहब ने इन्वेस्टर की हालत ऐसी ही कुछ कर दी थी और आगे भी करते रहेंगे. सेकंड, डॉन को समझना मुश्किल ही नहीं, नामुमकिन भी है. एंड फाइनली ट्रंप घायल है, इसीलिए घातक है. So keep watching what happens on the global side.
Thank you. As always, it was wonderful talking to you. Thank you so much.